Hello everyone, welcome back to the channel The War Diary. Please subscribe and like my videos. Today I want to take you through a deep dive of a story that's both shocking and pivotal in the landscape of global trade and war. China's $3 billion trade route to Moscow being wiped out in a matter of hours thanks to Ukraine's action. We're going to break this down as though we are reviewing a big product, talking about it in terms of exterior, interior, performance, safety features, unique selling points, price, yes, even though it's an infrastructure/trade story, and then a conclusion. Strap in. First, exterior. Imagine this massive overland corridor, a major trade artery running from China into Russia and ultimately towards Europe via Moscow. This wasn't just a road or a rail line. It was a symbol of ambition, the physical manifestation of an economic alliance between Beijing and Moscow. The route was touted at something like $3 billion value. Analysts saw it as critical for sustaining strategic trade flows and for bypassing traditional shipping routes that are vulnerable. The exterior presence was grand: large transport convoys, freight trains, logistics hubs, border crossings, infrastructure built with big budgets, the whole show. And externally it looked robust, like a flagship project of the Belt and Road Initiative Bureau kind of scale, linking markets, reducing transit times, enhancing connectivity. However, from the outside you could see the vulnerabilities: long stretches of terrain, border control dependencies, the need for security, potential for disruption in war zones or sanction regimes. So from the exterior the project looked bold and promising, but also exposed. Now interior. Inside the guts of this operation, there were several layers of infrastructure, logistics, regulatory frameworks, finance flows, supply chains. The interior, is the mechanisms by which goods move: warehouses, rail yards, border posts, customs clearance, fuel supply, freight forwarding firms, truck fleets, train services. On the regulatory side, China and Russia had to coordinate not just construction of infrastructure but operational aspects: customs tariffs, transit rights, security of cargo, insurance, currency settlement, especially given sanctions and the political environment. All of these shaped how the trade route actually functioned day to day. The interior workings also included the ecosystems of suppliers. Goods being shipped might include Chinese manufactured items, raw materials, electronics, industrial goods, Russian commodities, etc. For this particular route, one key interior challenge was finance. Given the war in Ukraine and the sanctions against Russia, payment mechanisms, currency flows, and banking relationships were under stress. The corridor's interior was therefore not just physical but financial and legal. Another interior aspect: risk management. Because this route ran through or near conflict zones or through nations affected by sanction regimes, there were added layers of security, insurance, alternate routing plans, fallback options. One can imagine in the interior, you had to have war risk insurance, contingency logistics, rerouting protocols. And when the corridor collapsed, the interior revealed its fragility. One or two strike events, one disruption in transit or availability of goods, and the system started breaking. In other words, the interior was as important as the exterior. No matter how impressive the outward infrastructure looked, if the supply chain mechanisms, finance, border coordination, security, and diplomatic stability faltered, the entire route could fail. When Ukraine took the route down in hours, it exposed interior weaknesses. Supply flows halted, financing shockwaves, alternative routes had to be sought, and the logistics network unraveled. So in reviewing this trade route as though it were a product, you see, the interior tells you where the real strength or weakness lies. Next, performance. How did this route perform? Initially, it looked like it would perform strongly, linking China's manufacturing engine to Russia and Europe, reducing transit times compared to shipping by sea, offering strategic resilience, but performance in real world turned out to be patchy. With hostilities in the region, ongoing war in Ukraine, sanctions against Russia, and multinational supply chain disruptions, the route underperformed relative to expectations. Especially when a fast, targeted action by Ukraine disrupted segments of the route, the performance delivered dropped drastically. Freight volumes likely dropped, transit reliability was affected, insurance and costs rose. The speed and responsiveness of the network were compromised, so performance-wise this route may have started with promise, but the war environment and political risks weighed heavily and eventually performance was severely impaired. Now, safety features. In a trade corridor sense, safety features refer to the protections built into the project to mitigate risk, infrastructure resilience against attacks, diversions or alternative routing, insurance/trading partner protections, security of cargo and transport, customs compliance, financial and legal safeguards to deal with sanctions. For this corridor, some safety features would have been anticipated, maybe alternate border crossings, backup routes, strengthened security at vulnerable points, coordinated intelligence/monitoring of threat environments. But evidently, the safety features proved insufficient. Ukraine's action took the route down in hours, meaning the corridor was exposed and vulnerable. The fact that one side's military/strategic action can disable this massive investment implies that the safety and resilience features were not robust enough. In reviewing it, one would flag that while the infrastructure may have been built, the safety planning, military/strategic risk mitigation, geopolitical contingencies lagged. So for future corridors of this kind, more advanced safety features are needed. Hardened infrastructure, distributed network rather than linear vulnerable chains, alternative finance/banking options, adaptive routing, real-time monitoring of risk, diplomatic/federal backstops for hostilities. Unique selling points. What made this route special? 1. It offered China access into Russia and potentially Europe in a reduced cost/time path compared to traditional maritime routes or rail that might be blocked or longer. 2. It bolstered Chinese-Russian strategic alignment. By building this corridor, the two countries signaled deeper cooperation beyond normal trade. 3. It provided China an alternative to ocean freight subject to maritime choke points, blockades, naval risk. 4. For Russia, this corridor offered access to Chinese goods and investment and geopolitical leverage. 5. It was symbolically significant, a major infrastructure project of the BRI through a key ally that could alter Eurasian trade flows. So these unique selling points, strategic access, alternative routing, geopolitical symbolism, were quite strong. However, the challenger is that these selling points depend heavily on stable political/military environment, which turned out to be lacking. Price. The headline figure was around $3 billion worth of investment in the trade route to Moscow. That's not just construction cost, but includes logistics, infrastructure, financing, border crossings, land/rail/road works, ancillary facilities. So from a cost perspective, this was a major capital outlay by China and Russia and partner nations. In a trade review analogy, that price tag sets high expectations for returns, volume of trade, transit fees, strategic benefit, reduced shipping cost. But the question becomes, will the returns justify the price given the risks? Given the disruption by Ukraine, the price now looks heavy relative to the realized benefits so far. From a buyer's viewpoint, China/Russia, the cost-benefit analysis is now under stress. So our price section in this review would note, large investment, high potential, but significant risk. Conclusion. So what do we draw from this? The story of China's $3 billion trade route to Moscow being taken down in hours by Ukraine is a potent lesson in infrastructure, geopolitics, and risk management. In our review analogy, great exterior, promising unique selling points, but the interior mechanisms, finance, routing, risk mitigation, and safety features were insufficient given a high-risk geopolitical environment. Performance has been compromised, the price tag is large, and the returns uncertain at present. For China, this may mean reassessing such high-stakes trade corridors in conflict zones. For others, it means seeing that trade infrastructure isn't just about building roads and rail, but about securing them, ensuring them, routing around conflict, integrating with resilient financial systems, and building political/diplomatic stability. In short, the concept was sound, but the execution and environment were flawed. If I were summarizing what to watch for, how China and Russia respond, will they rebuild the corridor elsewhere, route via safer territory? Will China diversify away from reliance on Russia through trade routes that pass near conflict zones? Will Ukraine's actions serve as a signal to other infrastructure builders? Risk is high, protection matters. So the takeaway, this trade route might be gone, or at least heavily impaired, but the broader lessons apply to any infrastructure mega project in geopolitically unstable regions. That's it for today's review. If you found this analysis useful, please hit like, subscribe, ring the notification bell so you don't miss future content on the War Diary, and leave your thoughts in the comments. Do you think China will rebuild or change strategy? Thanks for watching, and I'll see you next time.